I always bought gold as a safe asset, not because I was thinking that it would go up a lot. Gold went up a lot, or the purchasing power of money went down a lot. I could argue gold was steady. What was unstable was the value of money. So I continue to recommend that people hold gold. I apologize, though. Had a wake up call. I think that people should own gold as sort of an insurance policy against bad economics and bad interventions by incompetent governments. And everywhere, I mean, I would have voted for Trump. There's no question about this because I think he's much better than what the Democrats had. But the fact is simply that he's a horrible interventionist into everything. I have everything. I have gold, silver, and platinum, but the biggest position is gold. But it doesn't mean that I think that gold will go up more than silver. Maybe silver goes up more than gold and so forth. That I'm not worried about. And what I try to explain to my readers is I hold gold. For me, it doesn't matter if gold would go down for a year or two. I mean, I started to buy gold meaningfully in the 1980s, okay? And it never moved. It went down until 99. In 99, the gold price was around, the low was $253. And then it went up a lot until 2011. And then again, it didn't move and went down until 2015. And traded in 2015 briefly below 1,000. I mean, these are correction periods, but the gold price can have lengthy correction periods. But I'm trying to explain to people the stock market, in my view, has a huge downside risk. People don't realize this, but the downside risk is significant. And if asset prices go down, commercial properties, the residential properties, which would hurt your business, by the way, and the stock market goes down, it is likely that the price of gold will also go down. But it may not go down as much as the other assets I just mentioned. I began the interview by telling you that, in my view, 60 to 70% of the global population is already in recession because they have no assets. And as asset prices go up, it benefits the rich people, but not the masses. And the masses, I mean, the typical Tom, Joe, and Dick, he is suffering from price increases across the board. Insurance for the house, interest rates, car prices, grocery prices, energy prices, gasoline prices, insurance, and so forth. All these prices are going up more than his salary is increasing. The Fed is not independent, and Trump will not wish to increase interest rates ahead of the midterm election. Believe me.
Yeah. So,
Kevin Walsh, by the way, I have a high opinion of Kevin Walsh. He's a bright chap, very intelligent, and he studied economics, also the classical economists. He understands the relationship between money printing and price increases. If you want to kill inflation, you push up interest rates to 10%. I tell you, there's not going to be any inflation. There will be a colossal demand destruction, and prices will collapse. But the economy will collapse as well, because the economy nowadays is very dependent on the level of the capital market. So that I'm trying to explain to you that under the current debt profile of the US, under the condition of midterm elections, the Fed will not increase interest rates meaningfully. The Trump administration, notably Mr. Trump, he was kind of dragged into this war. Maybe the Israeli, maybe Netanyahu had something on him, and kind of encouraged him to participate. Otherwise, these compromising documents of his deep friendship with Epstein would be revealed, or photos and so forth. So he got in. And then the Trump administration tried to justify the war by saying, well, we had to do it because the Iranians were building nuclear weapons and so forth. So they had to sort of justify it. And now they suddenly realized that although the US is actually not needing any Middle Eastern oil to speak of and is in a better position than other countries, their prices for oil products are also going up. And the midterm elections are coming up. And so Trump, he wants to have a good showing in the midterm election. And one major concern among voters are the women who go to buy groceries. And if they see the grocery prices go up and so forth, they are bitching. And so I think that the Trump administration is now backing off the war in order to kind of sort of not disrupt the economy too much. Do you understand?
Right.
The people in America, ordinary people, they wouldn't even know where Iran is. They have no clue. But they have a clue about the prices they pay at the grocery store and at McDonald's, and when they go and put petrol in the tank for the car, and when they pay the electricity bills and so forth and so on. So the Trump administration now is backing off because they want the deal to end the conflict and to bring down or at least contain the price increases. So in my view, they're in a horrible mess. And the problem, of course, is that the Israelis, Netanyahu, has to be mad at it because he wanted to really have a regime change in Iran, and that is not going to happen. So he continues his war in Lebanon, and that gives the Iranians some bargaining power. So I don't know. My sense is they will find a near-term solution, okay? But the near-term solution, when you look at it, doesn't solve anything and does not improve anything compared to prior to the war. This conflict is the most senseless conflict you can imagine. Like Ukraine, doesn't make any sense. But it seems that some people benefit from war effort, and a lot of money flows through to the arm dealers and the weapon manufacturers. And a war can sort of boost economic activity for a while. And the Americans will argue, well, we suffer the least in this war conflict. But that is not entirely true, because as a result of this war, interest rates on the government debt are rising, okay? Or they're not going down as much as they would otherwise be doing. And then the interest payments on the debt become burdensome. They're already the largest expenditure in the US budget. And if they go up, then more money printing has to get underway to finance the deficits, and that then has an impact on the rate of inflation. Inflation goes up and bond prices tank.
Wow.
So I tell you, I think some people told Trump that this war may cost a lot of money and actually prevent interest rates from coming down. That would be my view. Well, my sense is that the Israelis, under the leadership of Netanyahu, is kind of actually quite vicious regime, personally. That would be my view. But of course, if you talk to a Zionist, he will tell you differently. He will tell you, we need to do that because Hamas was an adversary, and Hezbollah is an adversary, and Iran, they want to destroy us, so we have to move ahead and destroy them before they destroy us, and so forth. You understand? The preventive war theory has been used by all leaders, whether it was Hitler or Stalin and so forth, and it doesn't make much sense, but it's going to be used. And in my view, if there are two groups, some people say, oh, Israel is doing the right thing, and others, also Jewish people, who say, no, it's wrong. We should stop this war effort. It causes a lot of damage to the reputation of Jews around the world, and it fuels anti-Semitism and so forth and so on. So, but you can find both views, and you and I will never be able to convince someone of our views if they have a different view. Never. The market is not taking into account that possibly interest rates cannot go down much here because of cost pressures that things will become more expensive. Secondly, at the moment, the money printing has actually been very favorable for corporate profits. But I lived through the 70s. I can tell you one of the major concerns in the 70s was for corporations that costs were going up more than their selling prices. And so the margins then started to go down, the profit margins, and earnings were then relatively subdued. And because of the rise in interest rates, the price earning ratios of stocks came down. And I have to say, given the inflation rate now, and let's define here the inflation rate as the increase in the cost of goods and services. If these costs go up more than real wages, then real wages decline. And in my view, already today, the interest rates are probably too low. They should be higher, in my view. But for many sectors in the economy, interest rates are high. Say, if you own a commercial property in Baltimore and Chicago and wherever, and the prices are going down on your commercial properties, then the current interest rates are already very high.